Okay, well, we're pleased to resume our day today, and I'm happy to introduce to you all Mark Sutton, who for I think 20 days now, 19 days, has been the CEO of International Paper. Mark joined the company in the mid-'80s, I believe, out of LSU, and like a lot of folks at IP that we've come to know, has had a very well-rounded experience. You've been in just about every business I think the company has, and it'll be interesting to hear today sort of how you view the company and how maybe we might see it change, even though it seems like you've been left with a pretty good set of businesses. Mm-hmm. And so with that, I don't know if you have any opening remarks, and we'll go straight into Q&A.
Sure. Well, just opening remarks, just to say I'm happy to be here. And you're right, it is 20 days into my role as CEO, and this is the first conference in that capacity, so appreciate being here. And you're right, 30 years has flown by. I always intended to work in the paper industry for a few years. I'm from South Louisiana, and you typically work in the petrochemical industry and oil and gas, but it was in recession, and I said I needed a job, and 30 years later I'm still here, and I think that's a testament to the company International Paper is, and it's a lot different than when I joined. I think we were $3.9 billion in revenue back in '84, and so I've had great opportunities to move through manufacturing, sales and marketing, general management, different geographies. So I'm excited about this role, and it's an honor and a privilege to lead a great organization. We're 116 years old this year, and there's a lot more for us to do.
Well, as you come into your role, it seems like, and we've seen it calm down some, but for really much of the last 20 years, IP has sort of been in a restructuring mode, and like I said, in the last few years, it's calmed down. Do you see any obvious needs for changes now or cost reductions in the company, or do you feel it's in a pretty lean state right now?
I think cost reductions in our type of industry is not an episodic thing. It's really something we do systematically. We have targets that in our manufacturing organization that at a minimum every year reduces cost at a minimum to offset inflation. And then there's opportunities where you do what we did in industrial packaging, where some synergies and acquisitions are a catalyst for even more dramatic reduction in overall system costs. So I think that's something that, regardless of the state of the company, is always in our DNA. But you're right, we have a good company right now. I'm starting with a good portfolio of businesses. There's still some things to do with what we have, and obviously there's some choices to make longer term on what we do in the future. So I don't have the answer to everything we're going to do, but I can say that we're going to be different in 3 to 5 years than we are now, and we're probably going to be different when I hand the company over to the next leader after that.
Go.
Can you talk to us about how much IP exports to Western Europe and kind of impact or dynamic of the euro, what that means for IP?
Yeah, the Western Europe market from an export standpoint is important to us. The primary product is kraft linerboard, and some of that goes to our own operations. And we view that, you've probably heard us say this, we view the export market for containerboard strategically, which means we're there all the time. And we've had customers, since the 50s and 60s in that part of the world. And so the currency movements will change the profitability maybe at any given moment in time, but it really doesn't change the demand. And in that particular product line, Western Europe is short on kraft liner, and the U.S. has been a long-term provider in IP in particular. So I would see that really not varying demand, but possibly from time to time varying the profitability. We do export other products, but some specialty pulp products that are sold in dollars. So I think it's something we've weathered before, and because we view it strategically, we're in it for the long term, and we'll manage through currency fluctuations.
Mark, could you talk a little bit about the domestic box market? And I did this one other presentation. I was tired of traveling with other people and watching them with the 4-wheel spinner things, and I had the old-fashioned, just 2 wheels. So my wife and I, we finally bought a couple of suitcases, and they came from China, and I would tell you they weigh maybe 5 pounds, and it was a pretty big box, mostly hollow, mostly air. And I looked to see if it had like a Lian Man or something on there, and it doesn't tell you who made the box. But it was just fascinating that something that weighed so little would be in a 5-ply box. And I'm thinking, certainly any kind of board that I've seen here in the U.S., you could have done it with 3 plies. And I'm just curious, is making a box generally more expensive in a place like China, even though they use inferior fiber? And does that have implications for lightweighting here in the U.S.?
So let me see that.
Yeah.
This may be overkill for your suitcase.
Okay.
It's a hard question to answer, but in general, when you have these recycled constructions, you end up with more plies to get the same performance. Now, what you don't know in this particular case is, does this company ship in standard boxes and they have to prepare for the absolute worst point of the supply chain? And if they had 2 complaints because a box was punctured with an empty suitcase in it somewhere in the supply chain, they may have made a decision it's better to go with a little bit more box and a little less complaint. So it's hard to tell, but I think this probably is an example of a box that's maybe over-designed, and the cost ends up, kind of equalizing when you end up with this level of fiber and plies. I think this looks like it's got variable degrees of fiber quality in the medium, and so I think that's really the way to think about it. The cost of the box is important, but depending on the supply chain and what's inside, getting it there safely and without customer negative reactions is probably more important.
And I guess the way that becomes kind of close to home is when you look at whether it's an SP Fiber or an Atlantic or a Pratt. I mean, could you talk a little bit about how you see what at least we perceive to be producers of a lighter weight product, how you all interface with those kinds of competitors, which have tended to be those that have added capacity, let's say, versus some of the larger, craftliner producers that we know out there?
I think the lighter weight constructions, it's not about the actual board, it's about the end use application in the box. And the lighter weight constructions do have a place in certain applications, but the U.S. market, not the makers of containerboard, but the customers and the users of the boxes, is a bit different than some of the other markets in terms of how their production and filling lines work. There's a lot of installed capacity that makes a difference on what kind of box they can use. The supply chain is different, stacking heights in warehouses. So all of that goes into what a box can or can't be made out of. And there'll be a place for lighter weight recovered fiber boards, but IP makes some of the lightest weight container board in the country, both recycled and virgin. And we're very innovative in our box designs. And so I think it's something that we're participating in. I worked in Europe for 5 years where it was very common to construct boxes with lighter weight, but it really fit the supply chain that we had in Western Europe anyway.
We've had a number of discussions about MLPs, and just to maybe open that topic a little bit, when you think about the MLP structure, could you talk a little bit about how you think it actually saves the ultimate shareholders in taxes, as that being one attribute, versus sort of the current valuation differential? Which one seems to have the most magnitude? Maybe not which seems to be the better of the two, but just which seems to matter the most as you do your work?
So I think we're doing that work right now, so we don't have the specific answers. And what we're starting with, Chip, is really whether or not it makes sense for us in terms of how we'd operate the business. And if you could get past that, and we're working on that, then you get into the individual structure and what assets you're going to put in and what the tax treatment of that is and how much capital comes in and what the tax treatment of that is for the parent corporation. And then the new investors that may not be in our company or in our industry right now would be looking at getting their cash flow at a different tax rate than a corporate tax rate. So I think in general, for us anyway, from what we've learned, is probably not a tax play as a driver. It's whether or not we create other sustainable value, and tax implications will be a follow-on.
Mm-hmm. So in other words, there might be a group of investors who would value that steady and growing cash flow stream more than maybe the typical IP holder today.
Well, again, I think that's the premise. We've talked, as I mentioned on our earnings call a couple of weeks ago. As part of our process, we've been talking to other companies in other industries that have already done this and what they've learned and what type of investors. And we've learned a few things about the type of investors that find an MLP attractive, and it's not exactly what maybe you might have read about or heard, whether you heard it was all retail investors, and in fact it's not. So yeah, there's people that might want to participate in a portion of an industry that guaranteed cash flow is interesting, and if you don't have it, they're just maybe not here, not available, and not interested.
You know what? And tell me if I'm wrong thinking about it this way, but a lot of MLPs, or like I think of a natural gas pipeline. It's not a very creative business, and I'm not going to overstate paper as being overly creative, but you have 25,000 box customers, and they're all probably not the same. Right. Whereas everybody kind of buys the same natural gas to heat my house, please. And so I just wonder, even though you could argue kind of the paper mills that would be the natural assets would probably fit well, you're still part of an integrated, if you will, entity that involves more than just producing a straight commodity and involves a lot of people. Is that a challenge that is maybe different about this industry than maybe some of the other industries and companies you've talked to?
I think it can be. I mean, you make a good point, and that's part of our due diligence on whether or not it can work for us. And we use general terms like, can we operate our business the way it needs to be operated, which means full flexibility on capacity, on where we make what product and which box plant we ship it to, all the things that allow us to create the value we create today, running the containerboard and box business as an integrated business. All that really has to be able to stay intact for this to work. And so the fact that we own the box plants and you've got a bit of a guaranteed user of that containerboard lends itself to saying this would be attractive and work and lower the risk. But because you own it and the end customer, 25,000 of them, creates some variability, it maybe takes you the other way. And that's exactly what we're working on when we say that we're doing the due diligence to see if this creates value. A big portion of whether it creates value and for how long is whether or not we can run the business the way we need to run it. We're not afraid of the complexity at all. We do other things in our company that are complex depending on your definition of that. And we've done things in the past that were pretty complex. But what really has to happen is we can run this business the way it needs to be run. And we run the business for a profitable box business, and we run the business as the mills as a system, and that has to be maintained.
I seem to remember years ago, and certainly in the wake of the Federal acquisition, there was sometimes talk I would hear from your predecessors about an attraction to some of the other paperboard grades, whether it be like beverage carrier board or coated recycle board. Is there a natural tie between what you see as your bleach board business and those? Is that something that would even enter your thought process? Or
we've been in and out of some of those businesses, as you know, in the past, and I think what attracts us to a business is, we try to do an internal assessment around the quantitative side of the structure of the industry and the position we could have or that we do have that we could grow. And the times we've been really successful as International Paper is when we've had a really good position, and that means cost and it means marketing capability and innovation and all that in a pretty good structure. And so if we thought we could get there in a product that we had a core competency in, an adjacent packaging product, it would be interesting for us. Timing on that sometimes is important. We were in some businesses in the past we got out of. Those businesses, there's been evolution in the end-use segments. So some of those products you mentioned are complementary, and the competencies are similar, commercially and manufacturing-wise. So those could be attractive in the future.
And I guess when you refer to the shifts, like some of the Shorewood businesses not as attractive, and cups and food service becoming more attractive.
Well, that's what we're doing today, and as you mentioned, Shorewood was an area that we decided that it wasn't the right fit for us after trying it for a while. Part of it was the end-use segments and the consumer-related end use and the design capabilities, and some of the shifting demand patterns. A lot of that packaging was in products that unfortunately went away pretty quickly, DVDs and other things that technology moved away from. And your design capability to work directly with the marketing people and customers, not the purchasing people. You got to be really good at that because it's not the same as selling some of our other products, which tends to be viewed as a cost by our customers. Those products that you mentioned with, for example, Shorewood, tend to be viewed as a primary package that's intimate to our brand, and you really need to have the right overall competency to excel in that, not just be integrated in the raw material. So we learned and we moved through time. We know a lot more about it now than we did probably when we got into it.
Mm-hmm. Any from the crowd? Because I've got plenty.
Yes.
What are you hearing from inside the Beltway with respect to the political winds towards MLP? This, you could say this isn't exactly the tax-friendliest administration. What are you kind of hearing around Europe?
We're not hearing anything more than you would be hearing. You're right. The overall view of anything that looks like something that lowers the U.S. revenue stream is being scrutinized right now, and I think this has the potential to do that, so it's probably in the same boat. I don't know how high of a profile it has, this particular issue for our particular industry, but I think you stated it very well, and we track that, but I don't have anything that you wouldn't have heard in the public space.
Talk a little bit about one thing that's kind of interesting about the whole corrugated box business, which, as we know, for years, generally never earned its, or did not earn its cost of capital. 1995 being an exception, but now we've seen a number of years back to back. And as you think about your relationship with your customers, one of the issue or vestige of the old age, or whatever, was the way pricing worked and still does, where it's indexed to the trade publication, Pulp and Paper Week. And talk a little bit about is that something that it makes sense to change, or are there actual wins for both you and your customers to keep it tied to what that publication says the price is for board?
I think right now our view would be that the industry needs some type of reference point for pricing. It helps our customers to have a published reference, and I think in general, as long as something works, nothing's perfect. There are other ways to do it, and other industries have tried exchanges and other ways. They all have issues. So I think as long as we believe it works, and it seems to work, it's not perfect, then it's probably a pretty good system. It's understood by the marketplace and our customers, and so I wouldn't see any burning need to say that we just need to change it because it's broken. There's always discussion about ways to help markets be as transparent as they can, but I think it works for the market and really all the participants right now.
Could you, keeping on pricing a little, could you talk about OCC and why pricing has been weak as of late? What do you think needs to happen to change to push OCC prices higher? And then moving on longer term, do you hold the opinion that OCC prices are headed higher as the global economy picks back up?
I'll answer the second part first. Yes, I do hold the view that OCC will trend higher rather than lower. Partly because there is the dynamics in OCC is OCC starts 4 months ago as kraftliner, and then in 4 months that box makes its way into the stream. And as the global economy grows and kraftliner usage is still growing, you'll have a certain amount of supply, but the collection rates are really getting to impressive levels in a lot of places, not just the US. China's made improvements. The problem, though, is when you have markets like Europe and China and maybe to some extent Latin America, where the recycled content for the boxes being recycled is already pretty high, the quality of the OCC goes down, and that changes the dynamic. So I think what's going to happen is the economic growth will create a demand pattern that bumps up against collection ability. And if there's any contraction in kraftliner production that gets into the stream, let's say some of the questions you asked about recovered fiber boxes are wildly successful, they start as a kraftliner box somewhere. So all of those metrics tend to lead you to believe that there's going to be kind of a, if not a shortage, OCC will be a very valuable commodity around the world, which tends to mean it probably will cost more. There is a cost curve for collecting it, and you know, at the high end of the curve, it's the stuff we see on our driveway, and if it gets too low in price, you know, people stop collecting the high cost OCC. So it's not all at the same collection cost. The lowest cost will always be there. It's at the back of a large supermarket or department store, but then it steps up quite a bit.
Let's talk a little bit about the Russian business, Ilim. It obviously, I think the market pretty much, I believe, sees through the volatility of the marking of the debt to market every quarter. In fact, we keep thinking if the ruble just, you know, stops going, you know, stays where it is for a long time, that could be fantastic for you. I assume you're selling largely in dollars into China, or at least it's influenced by that. But could you talk a little bit about your, you know, the whole issue with some of the concerns on the international stage? Is that affecting you? Are you, and when you think about your partner, you both stopped taking dividends to do this major expansion. Do you see that as being sort of it for at least that joint venture for now, for a period of years? And you know, how do they regard the attraction of the dividends that I think have resumed?
We did resume the dividend, and we reported in our last quarter, I think 56 million, I believe, of dividend from Ilim. And so let's take the geopolitical issues and see what that means on the ground. I was there in August at our Bratsk mill, one of the Ilim mills. And when you're on the ground there, it's business as usual, which is often the case in these kind of situations. So our view in Russia is a long-term view. There's some current turbulence, but it's really not affecting the way we run the business. And as you said, we do have a partner, which is helpful, especially in learning how to do business there, but it's especially helpful in these kinds of situations. The business has what it needs now to be successful for quite some time in terms of the investment that was made by Ilim, the build out of the Bratsk complex, the addition of the coated paper and uncoated paper machines that are serving the Russian market. But largely the strategy around Ilim has always been about China. And so the question about sales in dollars, it's 65–70% of the output of Ilim is really specialty softwood pulp for China sold in dollars. And so the customer base is not in Russia. The natural resource and the cost advantage is in Russia. And I think that's how we look at it for the long term. And there'll always be periods of time where we have to navigate some uncertainty. But our partners and our employees on the ground are really, we don't see any difference. Really focused on running the business.
Maybe shifting to Latin America. I know that it's interesting. I think it was at one of our conferences, actually, when Bob Aben announced, I think, the study of a pulp mill down there. And I'm going to guess that was 2006 or 7. So this is going back in time. And I don't think you never built it. Instead, you partnered, and I think you've added one uncoated machine down there. So you can correct me on my history. But as you think about that part of the world, and I know things are a little slow right now, but we sit back and we've seen a lot of hardwood pulp added and a lot of talk, and it now looks like it's slowing down. But how strategic do you view Latin America, and sort of how does it fit, and is it as core as some of your other businesses?
Well, I think it is. We like Latin America. Our paper business there is a very good business, and you're right. We looked at this pulp mill project. We ended up not doing it, and we sort of did an exchange, and we gained one uncoated free sheet mill from VCP, and then we built a machine next to the pulp mill that ended up being built by Fibria instead of by us, and we believe that was where we added the most value, actually converting the product and going to market with it. And we make a very good product. We have a very good position in the market, not only in Brazil, but in Latin America, the greater Latin America. But by design, we had enough capacity to export out of the region, And so as time goes on and that market grows, we bring more of that product back into market, and the results improve accordingly. And now we recently entered the packaging market in a relatively small way. And unfortunately, the market, country and the market softened a bit as we were just ramping that up. And we're not executing as well as we know how to do, but we know how to fix it. And then I think the market will be better as Brazil gets through this election and hopefully, you know, gets its economic policies back on track to a more pro-growth environment. But we like it. There's a great employee base. There's a good raw material base for paper and packaging. And we have been in Brazil, you know, through what we got with Champion for over 50 years. So when we go to Brasilia and we're on the political stage, we're viewed as a local company and a very important player in that market.
Do you think there'll always be a place for independent box plants in the U.S., or given the consolidation and the integration we've seen, is there a scenario where that model isn't really working?
Now, I think there's always a place. Independent box makers, many of them are our customers, are fantastic at what they do. They do things that large companies sometimes have trouble doing in terms of the nimbleness of their offering. They fit a need that the customers have sometimes, and they can do it cost effectively. They typically are very well-run businesses. We've got long-term customers that use our container board that are some of the most successful box plants that we've ever been around. So we like to try to run our box plants with a profit motive with general managers and mimic the creativity of an independent, but I think they play a very important role in the market, and they've been a great source of a customer base for us. And I do think they just do things that are better and different than sometimes a large company can do.
Kind of on that, there's definitely been a lot of chatter about conversions from, what newsprint into containerboard or other substrates, or even future greenfield capacity if OCC prices stay low. However, with less independent box plants, do you see those as being more risky, just because in any one region you would displace a lot of that independent market, and you would have to, by our estimates, you would have to gain a large regional market share if you came in with a greenfield facility or a major conversion?
Yeah, I can't tell you how other companies think about their investments, but if you just look at it logically, if you're going to make a raw material like containerboard that has very little value unless it's converted into a box, part of your calculus for making that decision is not just your cost position and the price of your raw materials, but it's how do I get my product to market, to the end market through a conversion operation. And if there's less of that available, it obviously would factor into the risk profile. So I think that's probably how people would be thinking about that. If it's a recycled product made in the U.S., it's harder to export, so your market really needs to be in that region you talked about, or at worst, in the U.S. that you can actually ship to economically. So I think that's part of the equation. Is what do you think you can do with your product, and what's your value proposition?
I remember for years, IP and share buybacks were never mentioned in the same sentence. And then, of course, there was the big buyback when you did the transformation back in the 2005-06 period. And then last, I think it was September, so it's been like 14 months ago, you said, yeah, we're going to do one, and we're going to do it over 2 to 3 years. And I think by then most people actually believed it, but I don't think people believed you would do it as fast as you did. And I just, you've been buying back your shares at close to an 8 or 9% rate, and I think people might not see that as necessarily sustainable, but you've bought it right with today's stock price. How do you think about buybacks and dividends? And I know the rule of thumb has been 3 times leverage, including pension. Any sense that might change, or the pace of buybacks change, or anything in terms of the allocation discussion?
I think the the balance allocation to capital is going to continue. So the percentages may move around a little bit, but the balanced principle will continue. I think part of what's different, Chip, is stock buybacks are a valid way to do that. We've obviously increased our dividend three years in a row, double-digit percentages, and we've invested in some really high return projects that help our existing businesses with the rest of the cash, and that'll continue. The share buybacks are, I wouldn't say that you can say they're a permanent part, but they are something that's in our view right now is sustainable, and it really goes back to the cash flow generation that we've been able to produce and now do for a few years, and we believe we've built a company that has the ability, roughly $2 billion in free cash flow, and we think we can sustain that. And obviously my job and the team's job is to grow that, and so we believe we can actually execute on what we say we're going to do. And so I think I would view the stock buyback, the dividend movement, and the projects we reinvest as a vote of confidence by the management team that we can actually commit to these things and do it. As you know, we've got a second authorization of another $1.5 billion. I think we have $100 million left on the first one, and so we're confident and committed to that.
Talk a little bit about the white paper business. We know last year it seemed to really, you obviously made a very difficult decision with Cortland, and in the wake of that, there seemed to be almost a mad rush to buy paper. But this year we've obviously seen, sharper than I think normal declines in terms, of shipments, and maybe part of that is just because there are people working off inventories or the imports. But how do you think about that business longer term? And is the right rate of decline, 3%, 5%? How do you think about that?
We've been saying it's 3 to 4%, the secular decline, and then there's every once in a while a cyclical bump in there. And I think largely our belief is it's still in that neighborhood. A little bit worse this year, but it's hard to tell right now if that's an increase in the secular decline or just, as you said, some cyclical activity with inventory and the lack of recovery in white-collar jobs and so forth. But our view is that we've studied this business a lot. We participate in it in other parts of the world, and so we've got a lot of different views on demand and consumer patterns and the role paper plays in the economy. And one of the things we've learned is that if you look at markets that have gone before us and the things that tend to take paper down, like broadband penetration, the digital revolution, how schools are educating children, the role that direct mail plays in marketing, if any. We believe that the U.S. still has an excessive, per capita use of paper that will level out over time. And if you just take some of those learnings and you bring it back to the U.S. market on a per capita basis, you end up with a paper market that's, somewhere in that 8 million ton range, not the 16 million that it was in 2000. And it's still a very important market. That could be an $8 billion market. And we have a very good position with really good assets, great marketing people, good position with the best customers that buy paper. And so we're not afraid of the decline. It's just a natural way that business changes, and we think we've managed it well. We've converted some of our assets, we've closed some others, and we've improved the rest. And we have 4 uncoated freesheet assets in the U.S., really 2 of them targeted at kind of the bulk of the market and 2 at the specialty ends. And so we feel like we're in a good spot. Cortland was very difficult. It was large, but mills are difficult to scale down sometimes and do it cost effectively. And Cortland was partially about managing our overall cash flow. There were some big capital needs that were coming that we didn't know about a few years ago. Environmental regulations changed, and now you got a big spend. And so we factored all that in and said it's probably not worth spending that money in an uncertain market. You ended up taking a big chunk out, and we managed it the best we could with our customers and with our employees. But it was a large chunk of capacity for the market, and it probably created some reaction, but I think that's mostly settled out.
And I guess on that, if you look at the future, and let's say at some point in time it makes sense, and our personal view, not necessarily yours, is that it would be a long time because there are a lot in this market. But let's say it makes sense for you to, with your customers and your order book, to consider another capacity action in uncoated. would it be more likely that you would do something like we've seen outside of Cortland, where people, in essence, stop making paper, but they repurpose the mill, and therefore most of the assets remain productive? And you know, like for example, in Franklin, in your case, where you're now making fluff pulp on those assets, and then there are competitors where they've been able to also keep the pulp mills, which of course is where I believe most of the investment resides.
That's right. I mean, the repurposing of these facilities is always in the mix, and in many cases, it's the first option, because if you have assets, obviously, that are competitive at converting a raw material into something that has value add, you should look at it. And that was the story with Franklin. That's a really great American manufacturing success story, not just an IP success story. There's a product that the rest of the world needs for absorbent products unrelated to printing and writing. All of what Franklin makes is exported, and it's done in a very competitive wood basin, creating good American manufacturing jobs. And because we rebuilt Franklin for fluff pulp, the actual site now is being used by other third parties, where we provide utilities, steam, and energy for other related industries that we don't own. So I think that's an example of creative thinking with assets that their products move through the product life cycle, and you have some choices. I just walk away and say it was a good ride, or I get creative and try to repurpose. So repurposing is definitely something we look at with any asset we have. If there's no viable option, and then you look at the next stage, which could include a complete closure and kind of remediation of the site, which we've done as well when we really couldn't find a repurposing.
And the other activities there, I think, do they include both tissue and pellets, or just tissue?
Both.
Both, yeah, that's what I thought, yeah, gotcha. Well, we might have time for one more. We're about at the end of our time. Well, listen, thank you so much, Mark. We appreciate you being with us.
Thank you.
And, I know you have a busy day, so.
No, I appreciate it. Thanks, everyone.